bring in Daniel Altman, economist and author at High Yield Economics. Daniel, thank you so much for joining this morning. And look, investors obviously feeling pretty good with stocks near record highs. What is the economy telling you?
Well, the economy is facing a couple of risks going into the second half of the year. The labor market is strong, but looking pretty fragile at the same time. And we still see some signs of inflation for the second half. We see the administration kind of talking down the dollar, which is going to mechanically lead to some inflation. And we're starting to see tariffs show up in prices. We're seeing it especially in producer prices. So we're seeing some headwinds that could start to show up. And with valuations so high, price earning ratios are so high, the stock market, it's really high right now too. So it could be ripe for a correction in the second half.
Interesting. I do want to talk about trade because we heard a trade announcement with Japan, a deal that is yesterday. How is this impacting the economy when it comes to topics like inflation and even consumer spending?
Well, this is kind of a complex deal. We haven't seen all the details yet. We do know that Japan will buy some actual stuff from the US, like some Boeing airplanes and some weapons probably, and that's good. We'd see some investments that could happen in supply chains. This big $550 billion number is really kind of a subsidy from Japan that's going to come in the form of loans and guarantees, but it really requires Japanese companies to want to participate. And so it's going to be up to them how much they invest. We don't know actually how much of that is going to happen. $550 billion is the upper limit. We do know for sure that tariffs on a lot of Japanese goods are going to go up. We're going to see 15% tariffs, which is a lot higher than what we have now. And that's going to feed into producer prices, primarily the raw materials like steel that Japan exports to the US. And eventually, American companies are going to pass that on to American consumers. If we look back at the 2017 tariffs, almost all of that was borne by American companies and consumers. So we're looking really to see that being paid by Americans and not by Japanese.
We are waiting a Fed decision next week, and by and large, the market does anticipate that the central bank will keep rates steady. How does monetary policy factor into this, and what do you think is the course of action for the Fed going forward?
The Fed's kind of been in a tight spot for a while now because they're looking at the labor market and saying, well, it's reasonably strong. We haven't seen signs of rising unemployment yet, so there doesn't seem to be urgency in cutting. And we're starting to see signs of a little more inflation at the same time. We really haven't seen inflation go back down to the Fed's target of 2%. So they've maintained a slightly contractionary stance. So, they don't see an urgency to cut, and they still are on guard against inflation. That's why they've been standing pat. We do have a couple of governors, Governor Waller, Governor Bowman, who've been saying no, the risks are to the downside and the Fed should start cutting, but they're in the minority right now. And I think while Powell is around, we're going to see the Fed wanting to stand pat a little bit longer.
Yeah. What does credit risk correlation tell you in terms of what might be fragile here when it comes to the fiscal picture?
Well, we just added about $3 trillion to the long-term debt of this country, and most of that is front-loaded in the next 3 or 4 years. And we are already running a debt that's equivalent to about 120, 130% of GDP. That is getting close to an all-time record, close to what we had in the aftermath of the Second World War. And we're not alone. There are about 7 major economies that are running debt to GDP ratios over 100%. Now, Canada also has a lot of financial assets, so it's in kind of better shape than some of the others. But you look at France, Spain, Italy, there are a lot of countries that are really dipping a lot into these credit markets. And interest rates are higher than they've ever been when we faced this situation before. So there are a lot of countries that are in really tenuous fiscal situations. If investors started to wonder whether the credit markets could really sustain this and whether countries could really pay off these debts in the long term, then we could be headed for really dangerous waters. We could see a kind of metastasizing global fiscal crisis, much like we saw with the Asian countries and Russia in 1997-98, but on a much bigger scale. And that's something that really worries me, especially when we see things like the 30-year bond heading above 5% and Japanese bonds now heading to some of their highest interest rates in decades.
Certainly geopolitics is something, Daniel, that's been in focus throughout this year as well. Is there anything on the geopolitical front that you're seeing that investors should know about?
Things have been relatively quiet. The big worries that we had were in the Middle East and Russia and Ukraine, those things that we worried about a large conflagration that could really interrupt economic channels, that could really cause a lot of uncertainty. Those things have kind of quieted down a little bit. And that's good because those tail risks are things that really could disturb the economy, big geopolitical shocks, the kinds of uncertainty that could really paralyze hiring and investment decisions on the parts of executives and managers. Right now, a lot of that uncertainty is actually coming from Washington. So unfortunately, the uncertainty is us right now. And I think people are starting to think, well, we've had a lot of taco trades. Maybe things aren't as bad as we first thought. But a lot of the effects of these tariffs are now starting to percolate into the economy. And in the second half of the year, I think we're going to see that showing up in inflation and eventually in consumer demand as well.
Daniel Altman, economist and author at High Yield Economics. Daniel, thank you so much for joining.
My pleasure, Kristen.
All right, everyone. Well, still to come, IPOs are front and